is ripping.
My tummy hurts.
Pretty good, right, man?
Hey guys, what's going on? It's Nick with Off the Chart Trading. I will be doing tonight's video for Tuesday, February 1st. New month, so let's see how this one goes, because obviously January was not fun at all. Actually, let me look at it. I was gonna say I don't have extended hours on. I don't think any of these charts. So let's take a look at here. We'll start with Google. I wouldn't be shocked if Google potentially saves the market mixed with Apple too. They announced a 20-to-1 split, which is pretty crazy. I mean, it doesn't really do it justice, but I mean, you're talking over, 250 point move from the close, which is just crazy. We were listening to it after hours, and I wasn't sure if one of the members mentioned the 20-to-1 split, but I couldn't hear Charlie, who we listened through Benzinga for the news, in the room. I didn't know if he was joking or what, but obviously that price action kind of shows not only was it a beat and a record quarter, but you sprinkle on any type of split on one of these big names and you get these types of moves. So I bought some shares, not many, I think like 5. I was going to do 10, but with these market conditions and everything else, I was like, nah. But even still, I have 100 shares, which is crazy after this thing split. So I'll probably end up holding this for the long haul because Google's just one of those companies that doesn't seem to be slowing down anytime soon. It's up there with Amazon and Apple and so forth, where names that you can own, and just history has shown if you just own them and don't do anything other than own them, you'll do very well. So it doesn't mean that will always happen, but definitely one that's been growing like crazy. Even, we get hit with a pandemic and they do record quarter. They were out of the pandemic, they're doing record quarter. So they're just, they're Google, YouTube, and all the stuff they do, Android and so forth. So obviously they're up there with Apple, so going out pretty close to the highs of the day. So we'll see. That's definitely a trade idea. Just using, Apple, I played that. I had shares in that one and held through the split. Tesla did well, really well as well. And I don't think it's going to be anything different than Google. I didn't see personally, but one of the guys in the room mentioned that it sounded, at least CNBC reported, that the split would take effect in July, which is kind of far away. Normally they don't push them back that far, but I guess we'll see. 5 months out just sounds kind of far. Normally when they announce splits, it's maybe a month or two. So, but anyways, further out. But I wouldn't be shocked once again taking out any World War III or the Fed raises by 1 point rather than just like 0.5 or 0.25, taking any craziness out of it. I wouldn't be shocked, and maybe remember this video. I wouldn't be shocked if Google's at, 3,800, 4,000 come the split. So definitely still, even though it looks extended, you literally go from, and we'll take a look at the higher time frame charts. I was just talking to Ed. I took a picture of this and I'm like, man, this thing's about to squeeze short, and then Google's like, psych. And then tomorrow momentum probably be above the zero line, or at least yellow, because that squeeze was setting up to potentially fire short, and, we were going to see a bigger pullback. But you literally go from potentially falling off a cliff, and I wouldn't be shocked if this opens up at all-time highs tomorrow. So there's definitely a play. I just bought shares, like I said, just to catch some of it. Depending on what the price of stuff is and the overall sentiment of the market, I'll see if I play calls. We'll see. Yay, I'm already up $260 on 5 shares after hours. But I'm sure this obviously will change tomorrow, come IV crush and all that stuff. But I know it was at Troy. Somebody in the room had calls and they did really, really well. So we'll see. Hopefully it opens up. Man, look at that. That would have been crazy. It's crazy to think even like $250 out of the money that these calls were still at $6. So we'll have to see how these all, even further out, 3,500 adjust and stuff like that into tomorrow. So we'll see. If it's not too crazy, maybe play some calls and hold them into Friday. But we'll just have to see how that goes. But anyway, I figured we'd start there because, when a big company does something like that, Apple, I think definitely, I don't know about saving the market, but definitely stopped it from dropping. And then you got Google doing a split into another $1 trillion company. Since these are so heavily weighted in the indexes, that, it could be the same song and dance where, it looks like it's going to be the end of the world, and then we go to all-time highs. Looks like it's the end of the world, all-time highs, end of the world, and then we just continue to grind higher. So definitely a little more serious over the last couple weeks, but we are so close. If it wasn't for, was it Friday or Thursday, whatever it was, Friday's relief rally, we would have had the worst January of all time in the market. So we'll just have to see how this continues. But like I said, up almost $250 after hours, which is almost a double expected move, 2x move, which is kind of crazy. But like I said, going from potentially falling off a cliff to all-time highs in a matter of a few days. So obviously, if you've been trading, that shouldn't be too surprising how this market can work. But yeah, anyway, that's I guess a trade idea, or just one to watch if you have a longer term account. At once a split, the best thing is, if you can afford it, is to buy pre-split, because people are going to wait now till it becomes $150 or $200 or whatever it is. Obviously, come the time of the split, it's a psychological thing. Obviously, it doesn't do anything with the company. They're not necessarily worth more, and that's one thing I don't think certain people realize, is the psychology aspect of it, especially the people that retail traders and potentially people with smaller accounts. They see Google at 3,000, and that's expensive. I might be able to buy one share, and what's one share going to do in the next 5 years? But if I can buy, 10 shares or 15 shares or 30 shares or 40 or 50 or whatever that number is, come July or whenever they do the split, it's perceived that they have more shares and it's a better value. And, I think people that are in the industry, and maybe they learn from Apple and Tesla, that nothing's changed. It's still the same company, the same valuation, and the same everything. It's just the perceived value that you're getting an amazing stock at a cheaper price. Why is it $299.99 instead of $3,000? It's all that psychologicalness. So I don't know if that's a word, psychologicalness, but if it isn't, I just made it. Once again, hashtag not financial advice, but Google's definitely one that I think if you end up buying here, could potentially to continue doing what it's done forever and just continue to go higher. So be curious to see how it goes over the next couple weeks, really couple months. Normally, like I said, I think, don't quote me, I think Apple's and Tesla's was maybe a month and a half, 2 months later, maybe 3 at the most. So for them to go out almost to, a little past half the year is kind of crazy. But I don't see it going lower unless we end up seeing some significant selling for other reasons, maybe some type of macro thing, whether it be interest rates or geopolitical with Russia and whoever else we end up having issues with. But taking all that out of the equation, and I guarantee you're looking at this chart, and every single month is one candle, and I guarantee each single month there was something. There was a laser pointer, a spotlight. Every single one of these months going back, 2016, Google's going to do this, or we're going to World War III, or it's a recession, it's a crash, or whatever the case may be. And then look at this chart just straight up. Granted, it's definitely been amplified since COVID's lows, but you get the idea from, $48 a share back in '05 all the way up to 3,000. So will it have this type of steep curve going, forward? I don't know. But, if you're looking for, places to park money, and I guess the safest during any type of legitimate pullback, I don't think you can go wrong with Google. But just my 2 cents, obviously, for what it's worth. We can take a look at the internals. Pretty solid day. Nice follow through after, especially the last couple weeks. We had some follow through on yesterday, and then the day before that, and then obviously, I was gonna say the day before that. I keep thinking it's Wednesday. I don't know why. My days are always off. But Friday obviously lit the fuse, and you see a little follow through over the last couple days. So maybe a little bit of a short covering rally into the close. And I kind of called it about an hour before it happened, around what was it, like 3 o'clock, I want to say, maybe a little before that, 2:30, talking about the squeeze on all the indexes, more defined in the Dow and the S&P for the ES. And I mentioned once again the cumulative tick heading higher, the VIX continuing to drop, especially this right there. It's really when I noticed it. So yeah, it was around 3 o'clock, maybe that crossed too, so around maybe 2:50 or 3 o'clock, somewhere in there. I made a comment about it with these squeezes and just overall momentum. And I've talked about it before. You've heard me calling it, market sense is, if you were short this market and now you're going on a third day where you're not seeing lower prices, you have big earnings, aka, Google, and they did a split. Obviously, the stock's doing really well. That's something to be worried about. Obviously, if you're short you're going to feel more. I mean, anything can happen overnight, but if we open up at these levels, NQ up 150, 200 points, ES up 50, 60 points, and it's just another day, well, chances are people are going to, not want to be short anymore. So that just causes more buying. And then, we potentially go back, I don't know about all-time highs before the Fed does anything, but, at least a little higher. So, we talked about there was signs that a potential short squeeze was going to go into the close, and it was just like clockwork. Exactly 3 o'clock, these started firing along, and you can see it more once again in that ES and the Dow and Q, and overall the Russell has done really well. A lot of the stuff I'm in is small caps and stuff, so I like to keep an eye on the Russell, even though they might not directly be in the Russell. Most of them are in the NQ, and that's the Nasdaq. But since they are small caps, I really keep an eye on the Russell overall. And like I said, it had a pretty solid day after the open. They tried to bring it down, and it kind of just hung in there. But yeah, like I said, just overall pretty solid advanced declines after that initial weakness in the morning, going out at the highs, or at least close to it. S&P advanced declines pretty close. Definitely with a nicely going higher. Breadth ratio is not anything too crazy, but considering some of the numbers we've had, I guess a little above 3-1 on each, and exactly 3-1 on the Nasdaq is pretty solid. The dollar did pull back over the last couple days, which is obviously good for the equity markets. Gold does what it does the last year and a half, 1,800. It could be the end of the world. It's 1,800. It's the best case scenario for the world. It's 1,800. I don't know. I'm over gold. It doesn't do anything. I think a lot of that money went into crypto, if I haven't mentioned that before. Because like I said, it doesn't matter. We're in an inflation. We're seeing the most inflation we've seen in 35, 40 years, whatever it is, and gold's not doing anything. And that's mainly the biggest hedge. Dollar could go higher, go lower. Gold doesn't really react one way or the other. So I'm not saying it's completely dead, but if you were betting on gold to do anything in these markets, you're either not making any money or you've lost money. So just my 2 cents. I'm a little sour after that GLD trade from last year. But anyway, bonds kind of fell off most of the day and then traded sideways, and yen not really doing anything too crazy. Oil's been kind of crazy. We've talked about that. Could it see 100? Possible. One of the main things to keep an eye on too is the 10-year, the TNX. Easiest way to watch it. Once it hit 1.87, it started getting higher, and this just the easiest way without going into Googling it and researching and YouTubing it is the higher this typically goes. This number, it goes to 18.5, it goes to 19, whatever the case may be, you would typically see pressure in tech stocks. That's the easiest gauge, risk on, risk off and stuff. And I mentioned that literally the beginning of the year. I was like, oh man, I'm surprised no one, it was literally this day, it was the beginning of the year, I'm like, I'm surprised no one on TV is talking about the 10-year just taking off. And then obviously 3-4 days later, it's like, oh shoot, it's at, a 52-week high or whatever the case may be. So, and then obviously we hit it over here, but it's at least calmed down and, slowed down a little bit. It's lower than the previous high from a couple of weeks ago. So we'll just have to keep an eye on that. But I think overall, everything's looking pretty solid. We can take a look at the ETFs. Financials having a pretty good, move over the last couple of days. We talked about energy. Energy's definitely been one of the better plays, and it's crazy how the market goes from you can't give away oil and crude goes negative. What was that? Was that 2020, like September, October, if I'm not mistaken? I know it was a little over a year ago. You literally couldn't give it away, and then obviously it's going back up, hitting $90. It's just kind of crazy, but the energy play I think might still be at least relevant for at least probably another 2-3 months. Industrials having a pretty solid day. I came up with a trade idea, and I didn't personally take it because I was a little worried that Google might not maybe miss, but not do as well with their ad revenue and some other little, people look for cracks in any of these things. So unless they're doing something amazing like a split and beating and doing all this stuff, the chances are the stock drops. You saw that with Microsoft. You saw that with some of these other ones. So Tesla too, granted they came back up, but after the news is actually out and the report is actually in, what do? They drop. So not that, there's always a buying opportunity, but I'm just saying in general. But anyway, XLC for you guys that don't know, and I talk about this in the room, is there's nothing wrong with playing the ETFs as, the sector itself. Like XLC, I took a screenshot and I put it in Trade Alerts on Slack. And, it's basically saying, if you're bullish Facebook, Meta, if you're bullish Google, I mean, the two Googles equate to about 20 something percent, and then Facebook's about 20 something percent, a little more. So you have almost 50% of it, it's like 46, 47%, whatever it is. I don't know off the top of my head, but I'm just going to say half of the XLC, which is the communications, that's Google and Facebook. So obviously, if you saw it move to the highs after hours up like $2, and if this momentum continues to shift higher, I wouldn't be shocked if it opens up at 77. So if anybody did XLC calls, they'll probably have a decent payday tomorrow, and that's a cheaper way of playing Google and some of these other ones without it. Now, me, typically, I'd probably get out first thing in the morning, but if people really think this move's going to continue, and Facebook, I don't know, do they report tomorrow or Thursday? I think it's Thursday. I can't remember. Thousands of stocks, and my mind can only handle so much. Let's see, is it tomorrow? Yeah, it's tomorrow after the bell. So maybe if people are feeling lucky, they can hold in. Let's just say Google continues and Facebook, Meta kicks butt and does something similar. I don't know if they're going to do a split, maybe a 4-to-1 split. Maybe that's the way to, oh, new shiny object. Look over here. Don't worry about interest rates. If they do something like that, then can easily go up to like 80 by the end of the week. But I'm not somebody that tries to hit it out of the fence. I'm perfectly fine getting the first base. And if anybody took XLC and everything holds up like it is, which it looks like it might, then you take the money and run, especially in this market, because I don't think we're necessarily out of the woods yet. Healthcare, I mean, everything kind of had a nice move today, and you can see that trend from the lows from last week continuing higher. So I mean, there's not really a clear window. I mean, there's some that are more aggressive to the upside, but what you want to get from this is that there's broad-based buying, and with our trend-based candles, you can see a lot more green than other colors, especially over the last 2 days. So you have an uptrending market. And like I said, it's broadly speaking, it's not specific to one sector, which is bullish. And when you got all 11 sectors going up, that's incredibly bullish. And obviously, you have the smaller semiconductors and some of these other ones, but home builders and materials and some other ones, but retail. But everything else, like I said, has just been slowly drifting up. So overall, we'll see how this goes. Let's take a look. I didn't personally look a lot today, but I'm just curious. We'll end it on this. Just take a look at where we're at in the bigger picture with a lot of this stuff. And we're coming up, we technically are above the 21 here. So this is typically, and maybe it's a 50, maybe it's a 20, 21, 34, whatever the case may be. But this area would be a go, no-go type area for me. So I would be cautious here. Like, this was obviously the move over the last 3 days, the last 3 trading days up. And then once you get to here, this is kind of where it potentially either slows down, either come back down a bit, maybe it comes back to its 200, or, trade sideways, or we end up breaking. I mean, that's obviously what the market's going to. It's either go higher, it's going to go sideways, or it's going to go down. And sometimes it's more defined when you have 3 days, and then you kind of, not that you have to have an exit, but you kind of want to have an idea of when's a good time to either take profits, or where do you need to look to potentially see, draw a fib from here to here. This is probably about, a little above the 50% line, just eyeballing it. And like I said, we're in, you got the 100-day simple moving average, you got the 21 EMA, you got the 34 EMA, you got a lot of points of reference right here. So tomorrow, I think, will be very important to where we go next. Like, do we end up, are we up another 30, 40 points tomorrow? Are we, slowly undoing this massive drop we had, one of the most aggressive pullbacks we've seen since March lows? Are we going to undo all this? And then are we going back to all-time highs? This one definitely felt different, and it was definitely more aggressive, especially on that Monday. But we've seen it time and time again where we get some selling, and then we think this is it, and it's like a roller coaster. You think you're going to drop, a couple hundred feet, and you're only drop like 3 feet, and then you're back up again, and you drop another couple feet, and then this one definitely felt like 50, 60 feet, but then here we are, coming back up a bit. So definitely a go, no-go type area. If there was like an area on the chart back here that I would be like, this is kind of where you want to either take profits or be aware of, it would be here. Not saying we can't go higher, but a lot of people, especially if this trend continues, and if you draw trend lines from here, this is still, in a downtrend from its highs. Not as defined and not as aggressive. If you drew trend lines from right here, then yeah, obviously this broke, and then breaking above the 200 and, mixing different, stuff like EMAs and simple moving averages and trend lines and all that stuff, we did break above it, but all I'm saying is an important area. We'll have to see how it all pans out. I mean, we're almost close to being back above the 8. What is the 8? I'm going to round up and say 45.60. So, I mean, yeah, what, 3-4 points from the monthly being above the 8. Not monthly, excuse me, the weekly. So then back to a green candle. So kind of interesting there. We'll look at the NQ. Should look pretty similar, just probably not as aggressively up. Yeah, so, you know, it's a little above its 21. 34 is a little above it. So, yeah, like I said, just barely got above its 34 EMA on the weekly. So it definitely got hit harder, and obviously it's taking a little more for it to get back up, but it's comparable. Russell, probably one of the main ones that I want to focus on personally. Like I said, we did have that squeeze fire short. Doesn't mean that it has to sell off for 4 to 6 weeks, but that build up for almost a full year finally did end up firing short. So we'll just have to see. Definitely still weaker than all the other ones. Not even above its 21 here. But you know, I'm rooting for the Russell to potentially go higher here. And then last but not least, I will say mainly because it is the bigger names, the safer names. The Dow really has not got hit that bad. I mean, from high to low, what, 36,000 and change to, you know, 30. I mean, what's 5,000 points? Not even, what, 3,000 points? What is that? Yeah, like 3,000 and change from the Dow is really not that much, you know, not even, it wasn't even a 10% drop, almost, like, just, I don't know. It's not as much, and that's mainly thanks to Apple. I mean, look at this weekly. This weekly squeeze still looks intact, you know, not as good as it looked over here, but still above the zero line and still in a valid squeeze. And here you are, futures now, as of right now, above all the EMA, so you got back to a green candle. So, and then here you go. The only one that's actually above all of them right now still has its 50 right there, but you break above the 50, which you could easily do today. And, you know, we'll see how it goes. But that's basically what I got for you guys. Like I said, nothing too crazy. All eyes on Google tomorrow. And just to see if we can break above this. Because if we do end up breaking through all these areas, I would say the path of least resistance in the short term would actually be higher. So maybe new money. I know there's money on the sidelines. Maybe kicking February off with a bang. I have the stock almanac here. First trading day in February. Dow up 15 of the last 18. So pretty good. And obviously it was up today. So we'll just see if this month ends up continuing to be strong. And then go from there. But I still think it's, you know, a cautionary market. It's one to be prepared for, that we could easily drop. Like I said, this is the area where you could easily come up to and then continue to fall over a bigger picture. But with these numbers and record breaking and this and stuff, and I don't know. I think a lot of this was already factored in, and we'll just have to see. I think overall, the end of the year, I think we'll be higher than we're at right now. But it's still early to say where ultimately we do over the next couple months, because it could be very choppy. And that's why I say you have either a very long outlook on certain stocks that you like, whether you're buying leaps 3 years out, 2 years out, or you're buying shares in companies that you think will do well in the future, or you're scalping, day trading, and doing small swings. You know, like XLC calls that expire this week. You know, either it's going to work or it's not. Looks like it's going to work. Take the profits in the morning, rinse and repeat, find something else, and just keep that momentum, because right now you don't want to go incredibly long and then get your head ripped off, and you don't want to go incredibly short, because then, you know, we can have a couple days like this and it undoes a lot of this move. So anyway, hopefully it's been helpful. As always, check us out on Off the Chart Trading, and you guys have a great night. Take care.